Okay, I want to welcome everyone. My name is Angela Powerhouse Williams, and on tonight's training session, it is all about where your money. And that is one of the most important questions that you should be asking yourself every single day, because the reality is every time you wake up, it is somebody somewhere trying to get more of your money. And so I'm just trying to make sure that you get to a point where you keeping more of your money and you can enjoy it, so that you can create a lifestyle for yourself that you and your family can enjoy, but also you can build a wealth legacy that even after you are no longer on this earth, your family still will be able to have some financial security. So this is a personal finance strategy session. And what I want to share with you is some tools that I have personally used to manage my finances and get myself in gear. And I know for a fact that if you use them, you're going to see a quantum leap in your finances and in your life. And so again, all I can do is provide you with tools. It is up to you to have the discipline to implement them into your life. And so these tools are available on the Lifestyle Changers training website. If you do not know where their website is, make sure that you go to our Facebook group. And in our Facebook group, you will see the Lifestyle Changers website and the password for their website. And again, that password does change periodically. So anytime that password is changed, the notification will happen in our Facebook group. So the tools that I'm going to share with you tonight is my budgeting worksheet, my debt elimination worksheet, the 401k future value worksheet, a retirement, I call it a retirement check. And basically it's for you to be able to know how long your retirement is going to last you. And then I also want to share a tip or so about slaying your mortgage. Okay, so we're going to go ahead and we are going to get started. Now, I do want to go over some things that I have talked about before, but you know, we've went through this, many of you have went through the tax season, and there's a lot of things that I have noticed, and there's some things that I want to make sure that everybody is crystal clear on why you in My Econ and the benefit of My Econ in your life. So number one, everyone who joins My Econ should have adjusted their W-4. That's step number one. You have to jumpstart your cash flow. And so everybody, once you adjust your W-4, that should free up some additional cash flow. And what I have told everyone is to make sure that you set up a separate bank account. So you can go to your bank and just have how you have your checking and savings, maybe set up another savings account that is separate, that you are going to transfer your income shift money to that savings account. That is the only way you're going to be able to see the true benefits of your My Econ business. If you let your income shift be in the same checking account that you pay your bills, you're going to find yourself saying, you know what, I really didn't see no difference, when really you did, but that's because you didn't separate your money. And then you also spent the money. And so you didn't see no difference in your life. And so by the end of this presentation, you're going to be crystal clear on why you income shifted and why My Econ is providing this opportunity to you. Now, those who adjust your W-4, your second step is to make sure that you download the Cash Flow Manager and that all of your lifestyle expenses is in that Cash Flow Manager. This is extremely important. You cannot adjust your W-4 and don't track your expenses, because if you don't, you're going to owe at the end of the year. And so if you don't understand that, that is because you haven't been to any trainings. You're not tied into us, because this is something that should be very crystal clear to everybody in our organization. So you adjust your W-4, every receipt needs to be in your Cash Flow Manager. What is income shifting? I want to make sure this is clear as well. So on the left-hand side, we have a picture, and this is basically your paycheck. Here's an example of your paycheck. And let's say you make a $1,200, well, no, not $1,200, $2,200 gross income. And let's say you get paid every 2 weeks. Okay, so you get $2,200 every 2 weeks. You're making about $57,200 every year. All right. And let's say you're single, you're not married. And let's say you had zero on your W-4 as allowances. So this is basically the amount that the government would like to take out of your paycheck. So the number of allowances, let's say, is 0. So what that means is that down here at the bottom of the before picture, it says federal tax. That means that the government is going to take $296.52 in federal taxes out of your paycheck. Pay attention to the net take-home pay. After taxes, your net take-home pay is $1,735. So this is what your paycheck may look like if you had not adjusted your W-4, and like many of you, you may have been told to claim 0 or 1 because you don't want to owe at the end of the year. So your paycheck will pretty much look like this. Now, after you adjust your W-4, let's say you adjusted your W-4, look at the after picture. The number of allowances have increased from 0 to 10. So let's go down to the bottom where it says federal taxes. So that means that they only took out $48.08 out of your paycheck. That is the result of increasing your allowances from 0 to 10. Now, pay attention to the net take-home pay. Your new net take-home pay is $1,983.62. So the difference between your before net pay and your after net pay is the reduction of federal taxes that are no longer being taken out of your paycheck. That is why we're adjusting the W-4. So that means that $296 minus your new federal tax withholding of $48 means that your paycheck increased to $248. Now, this is going to be true every 2 weeks, all right? So that means that every month you are income shifting $496. So when you hear me talking about, okay, this person income shift $500 a month, that is the result of adjusting your W-4. So if you're getting $496 a month, in a year, you have accumulated $5,952 that is back in your paycheck. But here's what I want to make sure that everybody understands. Look up at the top here where I talk about gross income. So your gross income at the beginning of the year is $57,200 because that's how much you made. That's how much you make at your job. After you income shift, your gross annual pay is still $57,200. So I want to make sure that you understand that when you adjust your W-4, you're not getting new money. What we're doing is we are giving you the money that you already worked for, that you already earned. And what we're doing is we are preventing the government from taking your money from you. So instead of letting the government take $296 out of each one of your paycheck, we adjust your W-4 so that they only can take out 48, and we put that money back into your paycheck. So your income don't change. Your net take-home pay change. So there is no new money. And the reason why I'm saying this is because there are some people who are joining my econ, and let's say you already got 5 or 6 allowances on your before, and then you adjust to 10, and you may only see a $50 increase, or you may only see a $100 increase, and you saying, well, that's not enough money. Well, guess what? That's because you are already adjusting your W-4. You are already taking more than what you probably qualify for. Because the reason why you were able to get more money was because you had a business which gave you more allowances than what you would normally be allowed to take. So that was the benefit of being in my econ. Or if you are somebody that you've been claiming exempt, if you've been claiming exempt all this time, that means you telling the government that you're supposed to have 100% of your paycheck, and they are not allowed to take any taxes out your paycheck. Well, if you found exempt, adjusting your W-4 is not going to add any more money to your net take-home pay because you already told them don't take out nothing. So you're not going to see a difference. So if you adjust your W-4 and it don't excite you, or maybe you don't have a job, or again, you filed exempt, so any changes in your W-4 is not going to make a difference, then that means you need to do what? That means you need to work your business and generate income so that you can get more money. Because if you're filing exempt and you still don't have enough money, then either you are overextended in your lifestyle or you got a money problem. So you got to build your business. So when you adjust your W-4, this ain't no new money. This ain't, you can't get something for nothing. That's not what this is. This is just keeping more of your hard-earned money. But here's what I want you to pay attention to. When you adjusted your W-4 and you getting that $496 a month, over $5,952 a year. Now let's say you didn't adjust your W-4 and you left it at zero. The government would take $7,116 out of your paycheck. And you're probably not even getting a $7,000 federal refund check. They might be giving you $2,000 out the $7,000 that they kept. And so the question you have to ask for yourself, is that okay with you? I know it ain't okay with me, but is it okay with you? Because some people don't want to adjust their W-4 because they scared of the IRS, but the IRS been ripping you off all this time. They should be scared of you. They should be scared of you because they don't want you to get this knowledge. Because if you had this knowledge, you would not allow that to happen to you. And so now that you adjusted your W-4, you got over $5,000 up front. Now, I said open up a bank account, a separate account from your personal account, because guess what? You've been paying your lifestyle all this time before you even adjusted your W-4. So when you adjust your W-4, you need to treat that as if you got new money because it could change your life. So just take that money and transfer it into a separate account. So at the end of the year, you should have over $5,000. Or if you use some of that money to pay off debt, you still should have $2,000 to $3,000 out of this almost $6,000 in income shift money. But if at the end of the year, you're talking about a federal refund check, that tells me you didn't do right by your money. That tells me you spent your money and you didn't save your money because you got more throughout the year than you ever will get from a refund check. And the only case in which that would not be true is if you are a lower income. If you're extremely low income, maybe you're making $20,000, $25,000 a year and you have children, well, you're going to qualify for higher earned income tax credit, higher child tax credit. So yes, you may get a higher federal refund check and it'll make you feel like you're getting some new money. Okay, but for the most part, you got more money than you ever get in a refund check. So I want to make sure that you understand that. Now, why do we tell you to track your expenses in the cash flow manager? I need everybody to track all your lifestyle expenses, your miles, and every receipt needs to be in your cash flow manager. Okay, so when we tell you to track everything, we mean everything. Okay, I was doing people taxes and people will say, okay, I tracked my car note and I tracked my rent. And that was it. Well, this is what you need to understand. Your write-offs, your lifestyle can be converted into business write-offs. Okay, if you track your records and you keep your receipts. Now, your total write-offs is only going to equate to a percentage. So that means you can't write off 100% of your rent. You can't write off 100% of your car note. It is percentages. So what we need you to do is the more expenses you track, the higher your percentage that you're going to be able to write off on your taxes. And so the reason why you are tracking your expenses is because you adjusted your W-4. And we want to make sure that you don't owe at the end of the year. So your business write-offs are going to offset your tax liability. And so at the end of the year, because you are a business owner, you join My Econ to have a business. It gives you the sole proprietorship tax status, which means you qualify to fill out the Schedule C tax form. Your business expenses that's in your cash flow manager, will be placed into your Schedule C. Now, here's an example on the right-hand side. It's just a snapshot of a cash flow manager report, because at the end of the year, you're going to be able to run a report, and it's going to show all your income and expenses from January to December, and they're going to subtotal each category. I do want to give a major shout out to Acutus. He had the best cash flow manager that I have ever seen. And when I say detailed, it was detailed. And Q, I had to take this little screenshot of your report, and I had to put it out here because this is amazing. Now, it was a lot of people who did have their cash flow manager reports with them. You know, Jose did an amazing job. Greg Artie did an amazing job. Actually, Joshua Randolph did an amazing job. Tanika McGill did an amazing job on making sure that they tracked everything, not a little bit, but everything. So as you can see, Q was able to write off over 23,000 of expenses. That's what he had. He had 23,000 in expenses. Plus, he tracked his miles. You guys, the money is in the miles. Your miles, every mile, the mile that you drive on your car, you're getting 55 cents per mile. Your mileage will give you more money than you tracking just your car note and gas you put in your car. Trust and believe me. If you're not tracking your miles, you're leaving a whole lot of money on the table. It could be the difference between owing at the end of the year and not owing at the end of the year. So when we tell you to track everything, track everything. So 23,000 in expenses, 11,000 in miles times 55 cents, that's 6,000. Plus, you get to write off a percentage of the interest from your car note. So that's giving him a car vehicle expense write-off of over $9,000. So you add that on top of the 23,000 in expenses, that's 32,000 in expenses. And he get to write off a percentage of that on his taxes. And so as I was looking at people, cash flow managers, they say, okay, I track my rent, I track my utilities and my car note. Yeah, that's easy. But guess what they didn't track? They didn't track their meals. Anytime you eat outside of groceries, you go to Starbucks, you go to Dunkin' Donuts, you go to Subway, you go to Red Lobster, all of those meals, get the receipt, take a picture of the receipt, put it in your cash flow manager. At the end of the year, you can write a percentage of those meals off. It matters. I told everyone to hire their children in their business. Everybody was told that. It's the easiest thing in the world. You go down to the bank, you open up a custodial account, put your kid's name on it, put your name on it, and then you pay your child. You write them a check, do a money order. You just can't do bank money transfers, okay? So if you want to, you can write off what, 12,000? You can write off 12,000 a year, up to 12,000 a year per child. Per child. Pay attention to this. So if you want to take advantage of that entire 12,000, then that means you're going to be depositing $1,000 a month into their bank account. So every month you're going to maybe write them a check of $500 every 2 weeks. You put the money in, you write the check, it's deposited into their bank account. When you get the deposit slip, you take a picture of it, you put it in your cash flow manager. Once the check clears, you can go to the bank, you can withdraw that money, and then you can pay your bills. Or if you have children that are in sports and dance and things like that, and they have a lot of fees, well, guess what? Pay them athletic fees. If you got to buy them uniforms and special shoes, their school supplies, their school clothes, pay them. Take the money out and then go buy their school supplies and stuff. And then at the end of the year, you're going to be able to write it off as wages. And so I told everybody to hire their children. I want to say about 75% of the people in our organization got kids and they did not hire their children. You're leaving money on the table. So when you end up owing at the end of the year, don't be surprised if you're not doing what I'm telling you to do. I'm telling you to do this for a reason. It matters. So tracking your expenses, mandatory. It's mandatory. This is what a Schedule C looks like. And this is actually real people, real results. So when I show you different numbers, these are people who are on our team. We did taxes this year, and I'm just showing you an example of what it looks like at the end of the year, because a lot of people believe that, well, if I adjust my W-4, I'm gonna owe at the end of the year. No, not if you track your expenses like you're supposed to. And this is the Schedule C that was filled out for one of my business partners, okay? So again, you need to document your expenses in your cash flow manager, have your receipts, because that's what make you audit proof, all right? So as you can see, if you look at the expenses part, you see $117 went to advertising, over a $15,000 deduction just from vehicle expense. This is what happens when you track your miles, people. Way more than what your car note and gas. Your car note and gas is not going to add up to $15,000. So listen to me when I say track your miles. Okay. Also, office expenses, $1,600. Over $8,000 in other business expenses like percentages of rent. $1,900 in meals, and that's lowball. I have seen some people with some amazing cash flow managers where their meals was $2,000, $3,000, $5,000, $7,000. I had one business partner that literally tracked $12,000 in meals. Now I told him, okay, that is your savings account. You're going to have to start cooking. But it's just the fact that it was tracked, okay? And so a percentage of that actually went in. Also, some percentage of utilities. This individual also hired their children as well, but they wrote off they paid them like $1,200, so they was able to write it off. Again, you guys, you can write off up to $12,000 per kid. So even if you was lacking in other areas, you can make up for it just by hiring your kids in the business and paying their bank account. And then the other $3,600 in expenses. So when it was all added up, it was over $36,000 in expenses that qualified as business write-offs. And this is an individual that was making over $78,000 with no children. So they single. So you know, they would have been taxed out of this world. And they got $4,200 because they adjusted their W-4. So their tax liability would be almost like, what, $8,000 if you make like $78,000 and you're single. And with the new Trump tax laws, if you're single and you don't have no children, it kills you. So what he was able to do is he was able to break even. And this is an individual who had been owing every single year because they were higher income and they were single with no children. So they owed the government every single year. But because they joined My Econ last year, they were able to use their lifestyle expenses, convert them into business expenses, and they no longer owe the federal government. Even the federal government gave them $344, plus they were able to keep $4,200 up front. Up front. See, tax refund checks don't matter when you keep your money up front. And so here's another thing that I wanted to mention, because I saw a lot of this, and I want to make sure we're clear here. Now, in order to qualify to fill out your Schedule C, again, you have to document your expenses. But what you also have to do is you also have to show an intent to make a profit. That means that you made an attempt to make money. Now, the intent to make a profit is to show business income in your My Econ business. At least $1. At least $1. Now, I have done some people taxes, and you wrote off $16,000, $15,000, $20,000 worth of expenses. I asked you, did you make one check in My Econ? No. The income was $0. So I'm gonna ask you, does that make sense? That doesn't make sense. This is a business. And with the IRS, if you want your write-offs, you have to have the appearance of having a business. Now they don't put a dollar amount and say you gotta make $1,000 or 20,000 and 50,000. No, that's not what they do. But they do not want to see zero. And the fact that I saw so many tax returns where you kept up with your expenses, but you didn't share the business with anybody to earn a check, that is a problem. It's also a red flag. You need to earn at least one check. If you share this opportunity with one person, I don't care if your check is $10 for my econ, that's $10 that you get to put down and not zero. Usually first 2 years of a business, you may not have that much in income. They don't expect it, but they do expect to see a progression at some point. So you can't use this business, you can't get something for nothing. You just can't. So you can't use this business just for tax write-offs. That's it. It's a business. You got to act like you got one. So in this example, this business partner actually earned $547 in their business in a year. All right? But it's not zero. I don't want to see that anymore. Because if you go to H&R Block, guess what? H&R Block is not going to give you your write-offs because you have what? Zero income. That's why I said when you go to H&R Block, you'll end up owing. Because you're not doing what you need to do to make sure that you qualify. Everybody on this webinar, everybody in this organization know one person that they can share this opportunity with. Everybody know one person who got a job, who got taxes coming out their paycheck and want to keep more of their hard-earned money. If you can't sell that, then I don't know. But everybody knows one person. That one person that you bring into the business will get you one paycheck. And that one paycheck is going to show that you made an intent to make a profit. Okay? Now, the $34.95 monthly membership, that is not all that you need to do to show intent that you had a business. That $34.95 is considered operating expense. The $34.95 is telling the government that your business was open. As long as you paid that $34.95, you had a legitimate business for that month. So for every month that you paid your $34.95, you can write off a month worth of expenses. So if you join my econ and you paid the first month and then you don't pay again to the end of the year, guess what? Just because your business is open at the end of the year, you only qualify for 2 months worth of write-offs. You're gonna owe at the end of the year because you're not doing what you are supposed to do. It's less than $1 a day, y'all, to maintain your businesses. So that's $34.95. That's what, $419 in a year. It's tax deductible. You get to write your $34.95 membership off on your taxes, so you get the money back at the end of the year anyway. So that makes your business free. So there's no reason why people can't maintain $34.95 and you getting $200, $300, $400, $500 in your paycheck, and you getting $10,000, $15,000, $30,000 worth of write-offs at the end of the year. All right? So work it out. Everybody should have at least one person in their organization and earn one check so that you can show intent. We cannot do zero sales. You cannot do that. That is a red flag for audit. So if this is the easiest business in the world, you ain't got to find somebody that want to buy makeup. You ain't got to find somebody that want to lose weight. You ain't got to find nobody that want to do jewelry. All you got to do is find people who want to keep more of their hard-earned money. That's not hard. Every friend you are around, your family, everybody around you is in the same situation. This is the easiest business to promote. This is what it looks like. This is actually from, what is this from? This is from TurboTax, a real business partner, all right? Single, one child. I want to show you what it kind of looks like. So she made $68,541. She tracked some of her expenses. Now, she wasn't in the business a whole year. So she had like a half a year worth of expenses. So she was able to write off $11,226. So that means that her adjusted gross income changed. So she went from making $68,000, which means she would have been taxed off of $68,000 minus $11,000. So her new adjusted gross income was $57,000. Plus she get the standard deduction, which for head of household, which dropped it another $18,000. And she went from not being able to qualify for earned income tax credit to being able to qualify for earned income tax credit. So she adjusted her W-4, which brought an extra $500 a month, right? And I said in a year's time, that's $6,000, really it's $3,000 because it was half a year. So $3,000 in cash up front, wrote off her lifestyle, still got a federal refund check for $4,383. So yes, you can adjust your W-4 and not owe at the end of the year or get a refund check. So $3,000 from cash flowing her W-4 plus $4,000 for a federal refund check, over $7,000 in a year. Over $7,000 cash in a year. And all you got to do is tell a couple people about it to earn the check so that you qualify for all that. This is the easiest business on earth. More results. Real people, real results. We went through a tax season, still doing taxes for people. These are examples of real business partners who filed their taxes with me. We got a single mom making about $30,000 in income. The before is her federal refund after I put in her child. Okay, so her federal refund would have been $22.47. Why? Because it's lower income. So you qualify for higher child tax credits. Then we threw in her business expenses. So her federal refund check increased from $2,200 to $4,600. So she would have got a $2,200 check, okay, if she wasn't in my econ. And here's what's amazing about this. That $30,000, 0 federal taxes came out. So she earned no taxes. She didn't pay any taxes at all. No taxes. So she kept a 30 grand and she got a 4,000 refund check. That's powerful. We got a married couple filed jointly. Their combined income was $110,000. They kept their refund. They adjusted their W-4s. They kept about 97% of that $110,000 by putting their W-2s in. And the children, they owed $1,566. Once we put in the business write-offs, refund $5,000. See how powerful that is? You can keep $100,000 and still get a $5,000 refund check. That's powerful. Another married individual, but they filed separately. So she made $58,000. Okay, one child. After putting the child in, the federal tax due $1,647. $1,647. After business write-offs, refund check over $3,000. And again, she adjusted her W-4, kept her hard-earned money up front. This even works for high income earners. We got a single mom, made $98,000, owed $8,000 federal refund, owed $8,942. She got a refund check, $1,400 after her business expenses. Married couple filing separate. She made $130,000 by herself. So she made $130,000. 85,000 of this 130,000, no taxes taken out. Old federal, 10,195. After business write-offs, refund check, $2,455. Can you imagine getting $85,000 tax-free upfront? And you still got a $2,400 refund check? And see, I like to do the before and afters because I like people to see the power of tying a business to your income. This is powerful. When you're making $130,000 by yourself, and this is with 2 kids, still owe $10,000, but they would have took about $18,000 out your paycheck. But she still was able to keep all that money and still get a $2,400 refund. If you can't explain this to people, there's a problem. You should be able to help tons of people income shift by just teaching the strategies of what it really does. And so that is why we adjust our W-4. We keep our hard-earned money. We use the write-offs to offset our tax liability so that we don't owe. And the only time that you may owe is if you did not have enough expenses, you didn't track your expenses, you ain't got no receipts, or your W-4 is filled out incorrectly. That is the only way. But usually, you should be able to at least break even. We can make sure you break even. And like I said, if you owe your W-4 would have to have been wrong. Now, another thing for people who are married, with the new Trump tax law, things change. So if you are married and you both are making over, $130,000 a year, $150,000, $160,000, I would recommend that one of you adjust your W-4 and the other don't. If you are single and you have no children and you make over $50,000 a year, don't put any more than 5 on your W-4. And that's a change that we want to make because of the Trump tax laws. He didn't change the game. He also took away a lot of the itemized deductions that people were used to being able to claim. A lot of people were like their mortgage interest, their real estate taxes did not matter this go around. It did not matter. So again, there were some changes that made, but at the end of the day, my econ is powerful. This is my income shift analysis that I did for a business partner who taxes that I did, because again, I really want to impress upon you why you should be building your My Econ business. This is your number one asset. So let's break this down. This is a business partner taxes I did. She's a teacher. She's single and she doesn't have any children. Okay, so I want you to look at this. 2017, her gross income was $52,619. 2018, which is the taxes that we just did, she made $54,1600. So her cash flow increased $1,397. In 2017, she was not in My Econ, did not have a business. So off of this $52,000 in income, the government took out $8,185 for taxes. That's federal, you guys. In 2018, after My Econ, she adjusted her W-4. So again, she didn't have a super high number because she is single with no children. But she only paid $3,195. She kept the other $4,990. Why? Because she adjusted her W-4. She was able to save $415 a month, put back into her paycheck. $8,000. She kept almost 5,000 out the 8,000. A federal refund check in 2017 was $2,700. Now, of course, if you adjust your W-4 and you kept almost $5,000, you probably was going to owe. But because she had business write-offs, her federal refund check for 2018 was $2,376. Not too much difference from the year before, where they took all her money. Pay attention. They took out $8,000. They only gave her $2,700. Where the rest of your money? This should bother you. This is why you're in my econ. When you meet with people one-on-one and they don't understand, this is what you can share with them. They took out $8,000. Only gave her $2,700. So let's add up the cash flow. She earned $1,397 because she got a pay raise at her job, so she got more money. She got $1,397 tax-free. She got another $4,990 tax-free, and she got that up front. Both of these was up front in a paycheck. And then she just got her direct deposit for $2,376 for her federal. Her total annual income was $8,763. Cash, upfront. Her total business write-offs was $17,874 from her cash flow manager report that's put on her tax return. And that $17,000 from that $54,000, guess what? It lowered her AGI to where her tax rate dropped. So instead of paying 22% taxes on her income, she only paid 12%. What's her return on investment? We calculate that return on investment by basically saying $8,763 divided by 419. Let's use in my account a year, $34.95 a month. That's 419. So she paid $419 to get $8,763 at the end of the year. Her return on investment. So if you divide them numbers and then multiply them, you should come to 2,091%. That's unheard of. You couldn't put $419 in the stock market and get $8,000 by the end of the year. It's impossible. It's impossible for you to do that. Can you get excited? Can you get excited? You should be able to get excited. This is why you're in my econ. This is powerful. I've never seen nothing like this in my life. Nothing. So again, if you ever want to know how your my econ business is benefiting you, add up all the cash. Add up all the cash, add up your refund check, and divide it by 419, and then multiply that by 100. And that'll tell you what your return on investment is. Now, let's say she kept the money and she put it in her bank account like I instructed. That's $8,763 by the end of the year. If she just stay in her my econ business, continue to do what she do, share the opportunity with a couple of people, earn her little check so she can qualify for her Schedule C, in 2 years, she got over $17,000 in the bank. In 3 years, she got $26,000 cash. Well, when you got $17,000 in 2 years, what can you do? Get a brand new home. You can just transition from being a renter to a homeowner. That's your down payment and closing costs. Or maybe you want to take the money and you want to start maybe buying some, get a foreclosure, tax liens. Or maybe you want a franchise or launch your own dream business. Well, here's your money. Here's your money. See, the problem is people are spending their money. You're spending your money and you're not seeing any difference in your life. That's why I called our team the Lifestyle Changers. This is why. If you actually follow this system and just do right with the money, your whole life will change. Now that you got your money, you got your income shift money, you got your tax money, you have to learn to become a manager of your money. So I'm just going to share with you some quick tools that I use personally to track my finances and to make sure that my investments are growing at a level that I need for it to grow. Now, one of our next trainings that I am going to do is give you some suggestions and share with you how I've structured my retirement account, that you can use it as well, you know, and some asset classes that you can invest in to grow your money. So the first worksheet that you want to complete, now again, all these spreadsheets is on the Lifestyle Changers website, is under the personal finance link. So the very thing that you need to ask yourself every single month is, where's my money? Because if you don't know where your money at, you ain't gonna never have any. So on this budget sheet, it is broken down. It asks you for your income every month and all your expenses. There's tons of expenses in here. From your mortgage, your utilities, your cell phone bill, if you got gym memberships, your car note, if you tithe in your church, all those things is on here. So you're going to take your bank statement at the end of every month and you're going to fill out this spreadsheet. All right. You're also, after you fill out this spreadsheet, identify some areas where you can cut some costs, some expenses that you can reduce. For example, maybe you cut your cable off for a while and you just do Netflix. Maybe you go and you change your plan on your cell phone bill. You know, once you start fixing your credit, maybe you'll go and try to get a better insurance rate on your car. Maybe you refinance a vehicle because your credit score has increased. So you want to always be looking for ways that you can lower your expenses. Now, what you also want to do is you want to look for waste. You want to look for waste because there's some bills you have to pay. You got to pay the mortgage and the car note and cell phone bills and things like that. But there's some other things that you are doing with your money that you don't have to do, but you're choosing to do. And if you believe that it is going to get you further away from your goals or get you further away from being debt free or getting you further away from being able to retire early, you need to cut it. Like I said before, I looked at people's cash flow managers who had $5,000, $7,000 in meals. Cut it. Cut it. Cut it. And the reality is, if you only check your bank statement, not your bank statement, if you only call your bank to see what your balance is, you're losing money. If you are not sitting down with your bank statement and looking at where all your money went for the month, you are not a manager of your money. And you're losing. On this spreadsheet is a category for savings and retirement. I found a lot of people in their cash flow manager, you had the money, but you didn't invest into your savings. Some of you could increase your retirement contributions, but you didn't because it's in your meals. A lot of your retirement is in your meals, it's in your lifestyle. If you want to go on vacation, make sure you budget that into your spreadsheet. Do not use your credit card to pay for your vacation and say, I'm gonna pay it off later. Save for your vacation. Use your credit card to book it and then take that cash and pay that credit card off. So vacations and weddings, anything that are big budget items, save for it. But the number one question is, did you pay you? So when you look at your bank statement at the end of every month, answer that question. Did I pay myself? Nobody cares more about your money than you should. My philosophy has always been to pay myself first. So before you pay your mortgage, before you pay your car note, before you pay your cell phone bill, pay you. Pay you. There's no excuse to pay everybody but yourself. You work hard for that money. Put some money in your emergency savings account. If you ain't got $1,000 in the bank, guess what? That's the first thing you need to be doing. Getting $1,000 in the bank, then getting $3,000 in the bank. every year you should be increasing your contribution to your 401k. So if you're doing 2% this year, next year need to be 3%. You got the money. You just don't know where it's at because you're not analyzing it and you're not directing it. So first you pay you. I don't care if it's $100 out of every paycheck. Put it in your savings account and you just don't touch it. Then you pay your mortgage and then you pay your car note and your utility bills. Now, if you don't want to use this spreadsheet, what you can do with your cash flow manager is you can add many of these categories and make them categories in your cash flow manager, and you can track it all in your cash flow manager. And when you run the P&L of your cash flow manager, you'll get a spreadsheet that looks similar to this. Okay? The second spreadsheet that you need to do is the debt burner spreadsheet. How many of you know when you're going to be debt free? You're in a whole financial literacy education company and you're not working on your personal finances. How can you get people to partner with you and you're not even using the strategies that is being provided to you in this business? It's easy to talk to people when you got your own results, when you're doing it yourself, right? So fill out the debt burner worksheet. At the top on the left-hand side, you're going to list out all your debt. And it's going to give you a balance. You're going to list the balance of your debt, the interest rate you're paying, and your minimum payments. There is a category that says monthly payment. That amount is the minimum payment. So for example, for this example of a real business partner, they got over $26,000 in debt. They pay $933 a month in minimum payments. So over almost $1,000 come out their pocket right out the top. That goes back to the banks because you're in debt. Okay, so $933. Now, this person is income shifting $600 a month. But the one thing that you'll learn from me is that you don't put your whole income shift money on top of debt. What did I say? Pay you first. So take half of that money and you save it. You put the other half towards your debt. Because remember, you had them debt and them bills way before you even adjusted your W-4. So act like when you adjust that W-4, act like you never got that money. Your life will change, I'm telling you. So she's going to put $300 on top of her bills. So she's making her minimum payments of $933 plus the $300 from the income shift. So that means that she's now going to be paying $1,234 a month to burn up that $26,000 in debt. So after you put your bills in and you put in how much you're gonna income shift, there's a calculation that is calculated for you. And basically what it's gonna do is it's gonna tell you your debt payoff date. So in this example, this business partner, who's a real business partner, she will have paid off $26,000 of debt by November 20th. Next year, November 20th, she'll be debt free. Isn't that powerful? And that's just by putting some of her income shift money on top of her debt. And what this spreadsheet also will tell you is it will line up which creditors to put the income shift on top of first. So what you're not doing is taking your income shift and I'm gonna pay a little bit of this, I'm gonna pay a little bit extra on this, a little bit extra on that. No, it has to be a focused effort. So it's telling you that extra $300 that you're gonna be putting on your debt, we're going to first start with this Carson debt where you owe $52.33. Well, guess where that $300 going? All the way on that $52. So as you can see, we're going to pay that off in the same month. It leaves some money left over. You can go to that next debt. We're going to pay off that $108. That's paid off, right? So that's what we did with the $300. The next month, we're going to go right on down the line. We're going to put that $300 on top of that $414. And basically what we're saying is by October, that is going to be paid off. November, Target is going to be paid off. And it just keeps going all the way down to the highest debt, which is a car note. Well, all of her debt, including a car note, will be paid off by next year, 2020. So what I need everybody to do is put your debt in and then let me know what your debt-free number is. That's what you post on social media. You post on social media, I'm going to be debt-free November 2020. That's powerful because most people don't know when they're going to be out of debt. Most people believe that you're supposed to die with debt, so they ain't even trying to pay it off faster. But you're different. You trying to build wealth. You can't build wealth in debt. Okay, so had she not adjusted her W-4 and not put that income shift money on top of her debt, and she just paid the minimum payments, she still will be debt free by September 2021. But because she putting that extra 300 on top, she's saving a year. Okay, so now she's gonna be debt free November 20. So she paid off her debt 10 months earlier than if she did not do it. She also saved $3,385 in interest. But in this business partner's case, she want to promote her business. You know why she want to promote her business? She don't want to wait 2 years to be out of debt. She want to be out of debt faster. So she's building her business and she's telling people about the power of income shifting so they might kind of cut her a check. So if she earns an extra $250 a month because she showed 5 people how to income shift, then guess what? Now she's going to be debt free June 2020. So she has sped up her date 5 months. What if she made $500 a month her business? Now she debt free in February of 2020. Another 9 months knocked off. What if she earned $1,000 in her business a month? She would be debt free by October of this year. That means she'd have paid off $26,000 in debt by October of this year. So you set your goals, you set your pace, you decide how long you want to pay people. Because the reality is, majority of your money is going to the banks. Your mortgage, your car notes, your student loan payment, your credit cards, all that money go to the bank. Then the rest of your money is going to big businesses and corporations. You got to get your hair done, you get your nails done, your cell phone bill, your groceries. Everybody getting paid but you. And so the point of you doing this, a debt elimination strategy, is so that you can earn and own 100% of your paycheck. That's what I want you to do. There's nothing that you can buy that's going to feel better than you being debt-free. Trust me, I know. I live a debt-free life. And as you go through the process of paying off your debt, it's going to increase your credit score because you're going to be paying off balances. So you're going to get a boost in your credit score just by focusing and zeroing in on your debt. The next worksheet that you want to fill out is inspect your 401k. So for those of you that got a 401k, you got a 403b, or you got a TSP, you need to be inspecting what you expect. So if you expect that 401k to be able to provide for your lifestyle after you retire, you need to inspect to make sure that that's going to be true. Okay, so what you do is you go to your HR, usually online or something. You should have some type of account that you can log into. And what I want you to do is I want you to go to this worksheet and I want you to fill it out. So you're going to put your current age. So in this example, I put the age of 42. This is a business partner that says she wants to retire at age 65. Now, keep in mind, you ain't got to work till you're 65. Remember, you retire when you got enough assets that will pay you enough to cover your expenses. So you don't got to work till you're 65 if you don't want to. All right, but in this example, she said, I'm going to retire at 65. She's 42 years old. Her 401k balance is $35,000. That's what she's got. Her current annual income is $55,000. We put in a raise of 2% every year. She's contributing 3% to her 401k. Her company gives her 100% match, up to 5%. Okay, so for everything she putting in, the company is matching her dollar for dollar, first 3%. But as we looked at her account, you have to pay attention to what investment fund did you tell them you wanted your money to go to? So different funds is treasuries, bonds, it could be an equity fund, it could be mid cap, it could be large cap, it could be pharmaceuticals, it could be internet stock companies, or they could just do a S&P, or they could do a Russell, they could do a Dow Jones. You have to see what investment funds are available in your 401k. All of them are not created equal. Okay, in her case, she was investing in a fund that was giving her only, let me go back here, 5% return on investment. That's all she was getting. So what I told her is, if you keep doing what you're doing, you got 23 years left to retirement. In 23 years, you're going to have $280,804. You contributed 47. Your employer going to contribute 47. Total contributions is 95,000. In 23 years, you got $280,000. So immediately what I told her is, you're in the wrong fund. You need to get a printout of the funds that are available. You need a higher return on investment. Because after 23 years, you should have more than $200,000, okay? So here's an example. You'll know what your funds are giving you. Here's an example. If that same fund was paying her 8%, 23 years, she got $473,000. Now we talking. Let's move it up. Let's say the fund is paying out 12%. Now, most 401ks, 403bs, I think the highest you probably get is about 10%. You have to go outside your 401k to get higher return on investment. You really have to get into the index funds. And we're going to talk more about that on another training, to where you can get 12% or higher. Most financial institutions are telling people that there is going to be a slowdown that's going to be happening this year, and especially in 2020. So you should only expect a single-digit return on investment. But I like to research. There are investment funds out there that is going to give you double digits, okay? So if you got 12% return on investment, 23 years, you got $1 million. What if you got a 16% return on investment every year? In the 23 years, you got $2 million. Do you know what your value of your 401k is? And if your answer is no, then you need to fill out this form. What you have to understand with 401ks is that your 401k also is attached to fees. So there's a percentage of fees that have to come out of your asset. So be mindful of that. Also, with a 401k, many of you are not maxing out your 401k, and I see the money where you could have maxed it out, but you just didn't. Max it out. Every year, add a percentage to your contribution. So if you are actually paying attention to your money and you see where your money is going, and you cut off some things that you know is not getting you where you want to be, you'll be able to increase it by 1% every year. And if your company is matching you, match the match. So if they're matching you up to 5%, you should be contributing at least 5% of your salary so that you get all that money dollar for dollar. If they're going to give it to you, take it. So everybody, I need you to analyze your 401k, and let's talk about what your number is. And then I can help you figure out ways to get a higher number, okay? The next form or spreadsheet that you want to do is going to basically let you know how long your retirement account is going to last you. I always use this example because it was powerful, because this is someone that I had talked to about my econ business opportunity. And initially she told me no, because she said by the time she retired, she's going to have $200,000. Her 401k was going to grow to $200,000. So we did this spreadsheet. All right. So we put this $200,000 in. All right. That's going to be her investment at the end of all of this. And so the question that I asked her is, I said, how much money do you need to maintain your lifestyle without making any major changes? How much money do you need? Now, mind you, she don't have a house. She renting. And she doesn't have any desire to own a home and pay off a home so that she got an asset and she ain't got to pay living expenses no more. So she basically going to be paying living expenses for the rest of her life. She's decided that's what she want to do. That's what she's going to do. Okay. And so she told me, you know what? I can scale down my life a little bit, but I'm going to need at least $3,000 a month. At least $3,000 a month. I said, okay, well, I'm going to take off $1,000 from Social Security. Everybody should get between $1,000 and $1,300. Maybe, because remember, I told y'all I got my Social Security letter. They told me they can only pay me out 76% of my payout right now. So for many of you, if you're under the age of 40, you're probably only going to get 50 to 60% of your Social Security payout. So you're going to have to contribute more. So in this case, I took $1,000 off because she should get $1,000 a month from Social Security. I said, so why don't we do $1,500? You're going to take $1,500 out your account to make up the difference. So $1,500 a month coming out of her retirement. Well, what I also had to add in here is inflation. So $1,500 right now is not going to be worth $1,500 20-something years from now. The cost of everything is going to continue to go up. She's 47 years old. She planned on retiring at 65. She got 18 more years. So she said, so basically in 18 more years, her investment account will be at $200,000, and she's okay with that. And so because of inflation, she ain't gonna be able to take out $1,500. She's gonna have to take out $2,500 because $2,500 will be the same as $1,500 now. So after taking $2,500 out her retirement account, that means that she could take out 88 payments out of her retirement account. Her last payment will be at the age of 72. So I don't know about you, but if you do the math, that means that in 7 years, her $200,000 retirement account is going to be zero. So that was her wake-up call. And she joined my econ and changed her whole attitude. And see, most people don't even know what their number is. They don't even know what their retirement account is going to be. They're not even planning for it. So if your retirement money is all gone in 7 years, that means that she's only going to be able to depend on $1,000 Social Security check, right? Every month. She still got to pay rent. So that means her children are going to have to take care of her. But what do we know? We know that by 2034, over what? 10 million jobs going to be lost due to technology and AI. So her kids probably ain't even going to be able to take care of her. So everybody's just going to be struggling. Nobody is responsible for your tomorrow but you. This is your wake-up call. So if you ain't on track, you need to be on track. I'm hearing sometimes people tell me, well, I ain't got time for this, or I ain't got time to put money in my cash flow manager. I ain't got time. You got time, because right now you're spending a whole lot of time wasting money. So we trying to put you on the right side of money. Your retirement matters. The last spreadsheet that I want you to do is the mortgage slayer strategy. This is for two types of people who want to own a home, people who already got a home, or people who you want to own a home, but you want a strategy, okay? So I'm noticing that a lot of my business partners, you're making good money and you're paying high rent. You paying $1,500, you paying $1,600 in rent. I got a big business partner who taxes I did, who just flat out told me they pay $3,000 a month for rent because they wanted to be in a really nice neighborhood and they want to put their kids in really good schools. So they paying $3,000 a month rent. I can't wrap my mind around it, but it is what it is. And so for a lot of you, if all you did is just focus on fixing your credit and paying down your debt, you can qualify for a home and pay way less than what you are paying in rent. So this is just an example of somebody, they make $85,000. Now, the one thing about the mortgage calculator that you can use in the tools, it says that your maximum housing expense is 28%. Now, for most people, your housing expense is way more than that, but we're going to use 28% because we want you to be conservative, and it's all about saving money. A lot of times people got these high mortgages because they're living over beyond their means, okay, because they just want this wonderful house. I know you do, but if you stay within your means, you'll be able to pay it off faster. So this is an example of a business partner who's getting a home for $248,000. They're going to be putting a down payment, so their actual a loan amount is going to be for $238,200. As you can see, their down payment was $9,925. Now, there are a lot of home buying programs out there where you don't have to do no money down or it's low money down. My thing is go ahead and pay it so that you have less money that you are having to pay out, okay? And if you are income shifting and you're keeping your income shift and your tax return, you could have $16,000, $30,000 in 2 years saved, and you'll be able to afford a $10,000 down payment. So that's nothing, all right? So now that you can get an idea of how much of a home you can afford, you'll know what your mortgage payments could possibly be so that you know that you can make that payment, all right? The next thing that you do after you decide, okay, I'm going to get this home, is you want to immediately start thinking about how can I pay this house off faster, okay? Remember, people are going to be losing their jobs. You don't want to still be paying no mortgage. So the next spreadsheet is the home mortgage payoff burner. Put your mortgage payment in there. That $238,000 loan, you got 3% interest, okay? If you was just to put an extra $1,000 on top of your mortgage payment, you will have your mortgage paid off in 11 years. Now, how do you get an extra $1,000? Your income shift plus paying off your car note. If you pay off your car note with your income shift, that will free up about $1,000 that you can put on top of a mortgage. If you do not have an income shift, well, guess what? You're going to make $500 in your My Econ business because you need money. So that's your debt plan. Pay it off. Decide whether or not you're going to do an extra 500, extra 200, but if it was an extra 1,000, that mortgage is paid off in 11 years. And just by paying that mortgage off in 11 years, guess what? Your total payments is $283,000. You only paid $44,000 in interest by paying that mortgage off in 11 years. But look what happens if you don't do nothing. You just make your minimum payments and you pay your house off in 30 years. You will have paid $123,000 in interest. You were paid over $361,000 for a $238,000 loan. So you almost bought your house twice if you pay the minimum payment for 30 years. If you increase your payoff, so as you start to pay off debt, you free up more money. So if you put $1,500 on top of your mortgage payments, it'll be paid off in 9 years. If you did that $1,500, and then every year you only took $1,000 out of your federal refund check and put it and made one more additional payment, you'll pay it off in 8 years. So that's a $238,000 house paid off in 8 years. This is powerful, you guys. And that's what happens when you keep your income shift and you direct it and you don't blow it. Now, for some people, you have a choice. Some people may decide, well, here's another strategy. I like this strategy, all right? So let's say instead of paying off your house, you choose to take that cash flow money and you invest it instead. So again, if you had a $238,000 mortgage, you pay extra $1,000 a month on top of that mortgage payment. In 11 years, you would have paid off your mortgage and you will save $78,000. Or you could take that $1,000 and you can put it into an index fund, get 12% interest, and in 11 years, you will have $310,084. So by investing the difference, so instead of putting money on top of your mortgage payment, you just invested it, okay? So if you invested it, you at the end of 11 years, you're going to be able to pay off your balance, because I believe the balance on your mortgage at the end of 10 years, I believe is going to be like 100 and maybe 64,000 or something like that. I can't remember. 164,000, 108,000, something like that. But you got enough money in 11 years to pay the whole mortgage off, and you will still have $113,000 left. And even if you look at the fact that if you paid the mortgage off by putting the money on top of the mortgage payments, you would save $78,000 in interest. Well, $78,000 from the $113,000, you still made $35,000 more if you invested the money. So you decide how you want to work it. You can take the extra cash flow and you can put it on top of the debt, or you could have the discipline to take the extra cash flow and invest it every single month. In 11 years, you have paid off your mortgage anyway, and you still got over $100,000 in the bank. And this is the same strategy that I had a business partner that decided to do a debt consolidation to lower their payment. So instead of going through and using the income shift to pay off their debt, they did a consolidation loan so that they could drop their payments almost in half. And then I told them to take the difference between what they was paying on their bills and the debt consolidation loan, take that difference and invest it. And by investing it, by the time the debt consolidation loan is paid off, you got your money back. You made enough money in your investing so that the money that you paid the debt consolidation company and all your bills, you got it back. So that's a powerful strategy. So that's the difference between paying off debt, investing, and then paying the debt off and still having some extra cash flow. So you guys, so what's important and what I want to make sure that you understand is that the difference between being rich and being wealthy is really a mindset. You have to believe that you deserve it. And if you truly believe that God is in you, then you should know that you were born to be rich, because the best of the best is in you. And so the idea of you not getting all the money on the table means that you can put a cap, a limit on God in your life. And so the person who want to live an abundant life always know that there's more coming. They're happy to know about knowledge. They're going to take time and they're going to watch the videos. They're going to track their expenses because wealth is what they want. They welcome new information. They're optimistic about the future. They think big. They're confident. See, the reason why people can't talk crazy to me about my econ is because I know the numbers. I know the numbers. I know how this business works. So I'm confident when I say that I can change your life, because I can. The people who don't make it in my econ is people who don't want more. It's people who don't want to follow the strategies. I don't know any lazy, rich, or wealthy people. I don't know any. People who don't want to share the knowledge with other people. You're going to be in a place of lack because you got to give to receive. Y'all got all type of people around you who need this help. I keep telling you guys, 2020, the markets is going to crash. People are going to lose their jobs. Technology is going to take your jobs. And the fact that you're not telling people and you're not helping people, there's something wrong with that. This is the easiest business in the world. So we're gonna stop playing small. We're gonna do big things. All right. And so I like this quote because it's so true. If you have a good wealth mentality, you will generate wealth wherever you go. Even if you lose money temporarily, your wealth mentality will attract it again. If you have a lack mentality, no matter how much you receive or what financial opportunities come your way, wealth will evade you. Or if it does come, it don't last. So the idea of getting something for nothing, yeah, you might can get something, but it ain't gonna last. You still struggling. When you make money illegally, yeah, it might give you some money, but over time, you lose it. And you have to believe that your money is given to you. Be grateful. And you be grateful by respecting it. And you respect it by managing it. You got to be a manager of your money. The Bible said that a good man leaves an inheritance for his children. It's your time. Building wealth will leave an inheritance for your children's children. But you got to decide that they're worth it. So get excited. Tell everybody about your business so that you can earn your paychecks. so that you are 100% audit proof. And you guys just be on purpose, be intentional and be on purpose. You got a lot to do. You got a lot of homework to do. So nobody should ever say they ain't got nothing to do, or they don't have nothing to do in their MyEcon business. You got a lot to do in your MyEcon business, because MyEcon stands for my economy, your economy. You are the CEO of you and your business. So manage it. So I want to thank you all for being on this webinar tonight. I pray that I enlighten you all to a whole new way of life. Sydney, I'm finna do a whole screenshot. Don't be trying to block your hand, girl. I got you. So you guys, I want to thank you for being on this webinar tonight, because I appreciate you all. Hey, Carmen, y'all been kicking butt. And like I said, y'all track them expenses, because that's your money. Tell people about this business so that you can get more money. More money, because I'm telling you, them 6-figure 1099s look real, real good. Trust and believe me. So you want to make sure that you get them. It's the easiest business on earth. And you guys, I could sell anything. And I've sold health and wellness products. I sold makeup. You all know it. That's my life. I've been in this industry since 1999. But this is different for me. And it's different for me because most of the businesses that I'm in requires the people that I love to spend more of their hard-earned money. And this MyEcon business allows people to save more of their hard-earned money. So I feel that right now I'm on the right side of money, and that I can affect so many people's lives. Because once you pay off that debt, you guys, you can live where you want to live. You should be able to drive what you want to drive. You should be able to travel when you want to travel. You should be able to make money and not have to work for somebody. That's the goal. Make money without working for somebody, because that job, you don't own it, you don't control it, and you can lose it at any time. And as long as the only income you have is from a job, your whole life is rented. Your mortgage is rented, your car note is rented, everything about you. You got a rented lifestyle when you don't make your own money. So this is really important. So again, 2035, a whole lot of people losing jobs. 2020, a whole lot of people losing jobs. You just want to make sure that you're straight. So don't get emotionally tied to people who don't want to listen, or people who not interested. That's their role. They're going to have to deal with it. But you just make sure that you and your family is good. Okay? All right, y'all. I'm letting y'all go. Thanks for being on. Good night. Good night. Good night. Good night,
Angela.
All right, y'all. Good night. Hey, Daisha. Good night. Good night, Tanika. Hey, Miss Holden. Good night. All right, y'all. Hey, Tina. Good night. Hey, Kendra. Good night. I'll be calling you in a minute, honey.
All right.